Alright, good afternoon everyone. Today is Monday, November 26th, 2012. Let me go over the results of the live trading room to start with. Alright, on the soybeans we were +6, on crude +5, on the YM +8. Alright, those are all ticks. Alright, those were the results for the live trading room this morning. The markets were pretty flat to start out with this morning. They were extraordinarily flat to start out with. We kind of figured that we were in for some kind of a move when we had this much room. When the trend strength line was down below the envelope for this long down here on the 10,000 contract, we were expecting that when it did finally pierce the envelope, it was going to move quickly and significantly. We did get a quick move. It wasn't terribly significant, but I suppose it's all relevant compared to the 3.5 point or 2.5 point range it had been in for the prior hour, 3.5 point for the prior 2 hours, and 4.5 point for the prior day. That 5 point move was 4 or 5 point move was significant. All right, before I go any further, if you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. All we need is your name and your email address. That's all we need. We don't need a credit card or anything like that. We will send you an email with instructions on it, on how to download the charting platform from Daniel's Trading. Also how to download the indicators. There are 4 sets in the indicator store that you need to download from us. Just right click on them, hit install, and they'll all install immediately on your computer. You get 5 business days in the live trading room for 2 hours per day. And access to Dwayne and I. All right, you get everything except access to the partners meeting. All right, you'll see all the weekly trading zones in the live trading room as we approach them, as we talk about them. You'll hear all the trading strategies that we're using and doing. You'll see me trading live. Whenever the opportunity presents itself, and all that stuff for free for 5 business days. Okay, now let's move on to the trades. I started out the morning with a soybean trade. All right, because there was nothing else going on. So I waited for the soybeans to open up. Now, prior to the open, I had drawn in some lines, some trend lines. Looking for, in this case here, I was looking for an up close above this trend line, and it gave that move up. In this case here, I was looking for an up close above this trend line, but we didn't get it until way down here below the BBC, so I wasn't that interested in it. Then it went sideways here. The soybeans went sideways until they opened. Once they opened, we had a bearish cross of the MA1 below the BBC. Pull back up and touch of the BBC. You could have traded this 2 ways. One was just a short right here on the down close off the BBC. Another was to wait for the close below the trend line. I shorted the close below the trend line, and I put my profit target here at the swing low. I took profit there. And then I was waiting for it to come back and do the same thing over again. It took a little longer. It took a little longer for it to do it the second time. Once it finally did, though, it was over here, and I did take this one as well. Now, the thing about this was it was quick down to the swing low. Once it got to the swing low, I put in my tick at +1. I put in my stop at +1 tick, and it came back and got me out at +1 tick before it made this nice move down. Right before the break, I drew in this trend line right here. So a close below that trend line indicates more movement down, and you can see it did move down some more. So those were the soybeans this morning. We ended the soybeans +5 ticks. I'm sorry, +6 ticks. I was looking over there, and it's crude oil that's +5 ticks. That's how we ended the morning on the soybeans. Okay. Let's jump over to the crude oil because that was the other place we took a trade. Now there were quite a few opportunities on the crude this morning. I pointed some of them out as they were happening this morning, but there was a lot of chop everywhere in the market today. This was the first area over here where we had bullish divergence and up close off the BBC. You could have gotten long there for the move up. I was waiting for some up close after the trend line, above this trend line that I had drawn, but the price it moved around too much down here in this level without giving an up close first, so I didn't take anything. There was an opportunity in here that I missed. Could have gotten long right in there. That went for 6 or 8 ticks. Then it was really choppy, didn't have any opportunities. Again, really choppy in here, not much opportunity. The thing you could have done with the bullish cross right here, the pullback down test of the BBC with the up close with bullish divergence, you could have gotten long in here for about 4 or 5 ticks. Not much happening in there. All right, all the markets were flat at this time, so I was really hesitant to do anything in here. The markets finally started to move around over here. All right, and you see I drew in these trend lines in the live trading room this morning. The down close over here with the bearish divergence to support the trade. It did it again right here. I missed that. It did it again right over here. The down close. This one didn't have any bearish divergence, so you needed to wait for the close below the trend line, which would have been right there for that downward movement. All right, over here it went right through the BBC up to the yellow brick road, bounced off of that perfectly, coming off a lower low, so you were anticipating that this would hold. Came back here, closed below the trend line, and started moving down. I did short it over here, and this is where I took, what did I take? 5 ticks profit on the crude oil. I locked in 5 ticks profit. I had put my target right here at the swing low, and it came within a tick of taking out my target, and I moved my stop to plus 5 ticks, and it got me out at plus 5 ticks. All right, that was the last trade that I took in the live trading room on the crude oil. But you can see it's moved around a little bit since then, and just quickly drawing in things that I would have been drawing in a live trading room. You would have been looking for an up close above that trend line, which would have been right in here with divergence to support the move, and that's pretty much it right there. All right, that was crude oil this morning, and we ended crude oil up 5 ticks. What else did we trade? Soybeans, crude oil, and the YM. I'll show you the YM trade. Note that these are all 4-tick range trades. All the trades I took this morning were on a 4-tick range chart. The difference between a 4-tick range chart and a 4-tick chart is on a 4-tick chart, a tick represents a transaction. Each bar in that case would be 4 transactions. You would have way too many bars to be able to trade it. A 4-tick range chart, in that case a tick means a price movement, 1 tick of price movement. With a 4-tick range chart, every bar is 4 ticks in height. So that makes it a little bit easier, gives you a little bit more control over your entries and your exits, and because you know where the top, if you assume the market is moving down and you have a bar that's begun, you know where the top of that bar is. You can anticipate where the bottom is going to be. So if you're going to get in on the close of that bar, you know where the close is going to be. And that's why I like the range charts so much more. You don't have to use a 4-tick. You can use an 8-tick, 20-tick, whatever you want for your bar size. But I use a 4-tick because it pretty much guarantees that somewhere in some market in the morning session we're going to have some trades. And today was a good example of it. We had nothing for the first hour and a half almost, and then we finally got something around 11 o'clock. You can see right here on the YM, this is a 4-tick range chart. I was watching price come down, and there were a few opportunities in here where it pulled back up toward the BBC and closed back down below that trend line. All right, I missed all those, but I finally jumped in on one down here. All right, where it pulled back toward the BBC, I drew in my trend line. As it pulled back toward the BBC, we had a little bit of bearish divergence going on down here, and we closed down below that trend line. I shorted below the trend line, and I was looking from a larger time frame. I was looking for price to get here to 879 is where I had my target on that. It was 879 from a larger time frame. I'll quickly just jump over there to that larger time frame and I'll show you what I mean. Over here where we pierced the envelope, right here, the price was at 899. All right, I was anticipating a 20 tick or 20 point move from this right here. All right, so taking an entry halfway down on a smaller time frame over here, I was expecting that it was going to get down to 879. Each one of these could have been, I could have entered in each one of these cases using the same theory, expecting it to get down to 879, but I had missed those. And I finally saw this one and grabbed it while I could. All right, it went to my profit target, and I took 8 ticks profit on it. Let's see. Dwayne went over the ES, so I really don't need to go over the ES. Dwayne covered that. The NQ, I didn't take any trades on the NQ, but you can see I drew some of these trend lines on here on the NQ where you'd be looking to enter the trades. Right there on the way up, that was during the break. Right here on the way down, there on the way down, here on the way up. But for the most part, I was not doing anything with the NQ this morning because the ES and the YM were stuck around weekly trading zones, so I really didn't even look at the NQ. All right, I drew a couple of trend lines on there while price was moving around, but that was about it. All right, let's see. What did I want to cover? Well, there was Black Friday on Friday. Anybody that was in the free trial last week, a lot of you guys continued on to this week. We had a special deal for Black Friday. We'll have a special deal for Cyber Monday too. Note, at the end of the day today, that deal is off the table. The Black Friday deal is already off the table, but at the end of the day today, the Cyber Monday deal will also be off the table. All right. If you don't have an email about it already, you will be getting one for everybody that was in the free trial last week. All right, and for that matter, I guess everybody that's in the free trial this week. Let's see. That's what I got. That's it. I could wrap it up right here. I could show you stuff on the Russell. We were using the Russell this morning as sort of an indicator of what the rest of the market may start to do because the Russell was jumping a little bit faster than the rest of the markets. You see I drew in a couple of trend lines in here on the Russell, but not much. I wasn't trading any of the indexes this morning, or I wasn't looking to trade any of the indexes until we had this movement here. I had put these trend lines on here early, and I said I wasn't going to trade anything until we get outside these trend lines. All right. All right. That's it. Dwayne, if you got anything else you want to add into the recording, you can jump right in. If not, then I will just stop the recording.
I think that pretty well sums it up.
All right.
There was a question about the 62% retracement on the ES that we pointed out, and I think the question said, does that have any? How does that affect the potential down move? Well, let me go back and read that question exactly right.
Okay. I think, was it the retracement the question was about, or was it the extension?
Does that retracement mean anything for the downtrend? Well, it means we had a 62% retracement. Beyond that,
oops, I drew that the wrong way.
That's what it means. It means we had a 62% retracement, and we pulled back to it once, caught a drop. Now we just pull back to it again. So we got a little double top there at that 62% retracement. And that 62% retracement, guys, that's based on pulling a fib from the swing high up at 1402 down to the swing low at 1395. Right now we've got a little double top at the 62% retracement, which is 1399. And so this is the opportunity for it to drop. Okay, if it's going to drop, here's what I would watch for. 1396 and a half. That's the tipping point. So I always like to give it a couple ticks on the other side of that. So that would put you down to 1396. But if you look left, swing low is 95. So that's only 1 point room to run, as we call it. So I'm going to say 94.5. Okay, that's 2 ticks below that swing low. Now you can be aggressive and just say, hey, you know what? I'm gonna take a stab at it from right here. Okay, because from right here, it's sitting up at what did I say? 99? Yeah, 99.
99 right here.
95. That's 4 points. And I want to go 2 ticks below that before I consider getting into a short to take me down to the next weekly trading zone. Then there's that all-important 93 number that I mentioned. earlier in the live trading room. So this may be, you may just want to wait this one out if you're not already in a trade. If you're in a trade, I wouldn't let it go against me I wouldn't let it go. The dynamics on a 10,000 contract chart have already shifted from the short side to the long side. What we've seen just choppy, violently sideways, as Mike Reed calls it, kind of movement today. So we can break free of these ranges and get some move going. I would, we had a huge up day Friday, holiday, the day the markets were open only a half a day, and I think most people, I didn't realize they were going to be open as long as they were. I thought they would close earlier than they did on Friday. But we had a really aggressive move to the upside, and anytime you have that sort of a day, you can expect the following day, just from a historical perspective, to be a bit of a consolidation day. And so that's what we're seeing in this area. Now, our weekly zone at 1399/1400, that's what the market has been playing around all day. It's been consolidating all morning in and around that area. That's sort of been the center of gravity. And here we've just pulled right back up to it again. So there's two reasons you might consider shorting from here. One is that 62% retracement double top, and the fact that we've pulled back up to the zone and put in a double top at the zone. If we get on the other side of the zone, that means if we start closing on the 10,000 contract chart above 1400, then you really got to start embracing the possibility that there may be a long trade coming. And if you're going to get long, you got to look left and see that swing high at 1401.25. That's the first spot you should expect to run into some major resistance. That's just based on what's happened today. That's not looking back into last week or any of that. So I guess, Michael, we've covered everything. We've invited folks to take the free trial. Now, guys, when you take the free trial, you're not just hanging out in the trading room watching us put on trades. You're downloading the platform. You're getting the indicators, getting the data. This is more than a test drive. This is you literally owning the car for an entire week. Okay? You get to do with it whatever you want. And stay up late, watch Globex, watch the yen, watch cattle, watch orange juice. Oh, by the way, if you follow us on Seeking Alpha, we had a nice little orange juice idea last night, and that worked out pretty well. I wrote the numbers down. Let's see, it was to be long above 127.15, and when I last checked, we had traded up to 129.50. $2.35 move, and that pays $150 per point. So that was a nice little trade. With that, we'll go to our friends out in Las Vegas, Nevada, see how their Thanksgiving Day was. Mr. David Williams from PageTrader.com and Miss Robin Dane, the trading coach. So don't touch your radio dial because we'll be right back.